All right, Todd, take it away.
Thanks, everybody. Thanks for joining us today. Today, we're going over the market statistics for the week ending October 13th, and let's take a look. 81 days closed on market this past week, a 5.2 month supply. Absorption rate was at 19.21. Average list price this past week, 736,846. Average sale price at 589,888, and the list price to sale price retention at 97.2. Active inventory up again, 25,964 available properties. Pending is sitting at 3,649, and closed units month to date at 1931. New listings, we took 2,063. We're above 2,000, if there's anything that was good about that, but we were down 8.4%. Days on market for active is coming in at 115.8, and for closed at 81. Lower left-hand side, price ranges, each of the different categories in the MLS, what percentage of the total MLS that category represents, all positive numbers. So although there was some shifting around of, the marketplace itself, as you can see, the 0 to 600,000 price range took just a little bit of a hit. Now, so 67% of all product in the MLS is in the $0 to $600,000 range. That's what this little chart means. And $600 to $1 million properties represent 19.80 of the entire MLS, and those properties listed at $1 million and up is only 13%. So here's something that's really, if you're not like seeing this as an aha moment on this little tiny little portion of the slide, is that everybody wants to go be a luxury agent. Everybody wants to be, sell more expensive homes. Well, here it is right here. Only 13% of the entire available product out in the marketplace in the MLS is priced over $1 million. Under that, so if you take the 19.8%, add it to the 67.5%, then the properties that are under $1 million, of course, you're looking at 86% of the entire MLS inventory is under $1 million. So this helps you identify, if you're going to pick a particular price range, you're going to want to know how many units are in that price range. And then you're going to want to further break this down to your own personal market. Maybe you're just the west side, east side, south side, north side, wherever you're working, and then see how many properties are located within that particular area. And that'll give you a great idea of the average sale. See, right now we're also, Mike, in October, which means everybody's a month short on calculating next year's business plans, because you should have started your business plans in September. And that way you can begin implementing those strategies that are going to change your numbers 90 days thereafter and throughout the month of year 2026. So there's some great signs here. If anybody's interested, you can always reach out to me. If office managers are interested, I'm more than happy to come out and teach, the business planning class. So new listings this past week at 2,063, down just a little bit. But again, how do you know whether we're doing better or okay when you see these numbers change week over week? Is the next two little slides, columns there, 2024 same week and 2023 same week. So, we did 2,063. It doesn't sound like it's a big jump from 1946 to 2,063, but 120 units, 117 units is a big number. And it just shows that there are more sellers confident in the market right now than there were a year ago. We look at active inventory is at 25,964. Of that, 312 of those are in the coming soon category. 19,730 single family detached, 2,862 new home construction properties. Boy, I certainly hope you're familiar with. Go to the products tab in MLS, in Armless, and look for Ultimate New Home Search. Don't go to New Home Search. Go to Ultimate New Home Search. If you're looking to have, search for new homes, that's the way to do it. Non-distressed inventory is representing 98.5 of the entire MLS inventory at 25,586. Taking a look at pending. Pending is, we kind of feel that this is a representative of how many buyers are in the marketplace that are actually willing to negotiate with sellers, because these people did and were successful. And these are open escrows. And so we can use this to see, is the number of pending increasing? Is it slowing down? And what does that mean to the marketplace? Well, 3,649, we basically had about 50, 60, 70 more people in the marketplace this past week over the prior weeks. And if you look at last year, 3,493, there's a couple of hundred more people in escrow and on average at any one time throughout the month so far versus 2,925 the year before. So we're not really having a problem locating buyers. It's just that it's, certainly we all think the market could always be better, right? So looking at closed, 1931 so far, we're at 1960, same period last year. So we're right in line with what's going on. Month supply is sitting at 5.20. So if you've been paying attention, anything above 6 is a buyer's market, under 4 is a seller's market. The last couple of weeks, we've been in the upper 5, at least in the 5s. And in comparison to last year, mid-range, neutral market, transition market. Well, when this gets closer to 6, 5.8, that's when you are now all of a sudden going to have significant buyer opportunities in the marketplace, more than there are today. But from a seller's perspective, the sellers are going to have to give up a little more as well. Looking at median prices, 454,000 is this week, 459. So again, still hovering. What hovering means is, the market isn't taking off. The median prices of the properties that have sold this past week are not, people aren't paying significantly more than they were paying last month or last year for that particular matter. Look, it was $450,000 last year. That's only $4,000 difference in a 4% appreciating market. So again, not big numbers. Market is pretty stable at 80 days, somewhere in 81 days right now in the marketplace. What's changing is the active inventory is starting to come down just a little bit because there's so much more newer, fresh market, and there's still a good number of sales that are going on. List price to sale price retention at 97.2. That didn't change, stayed the same. 97.8 is a sweet spot, but again, the seller's giving away about almost 3% off the list price, and this has nothing. At the time the offer was accepted, your offer comes in at about 3% under what the list price was. This is the average in the marketplace. If you slide your eyes way over to the left, you see 97.8. What I'm telling you is that's the number for the last 5 years. It actually goes all the way back to 1998, but this is the number for the last 5 years. We've been averaging about a 2.2% negotiation off the list price. And this has nothing to do with the concessions that are built into the contract. Now, somebody could say, well, it could, but this isn't concession money. This is, sometimes the sellers are willing to give up a little bit of the list price if you don't want anything else in the terms and conditions of the contract. On the other hand, it could be you want to pay full price because you're looking for concessions. So when you are going to write an offer, you must go to MLS, go into the market in which you're about to put the offer into, meaning the subdivision, and you need to pull comps and not only find out what the list price to sale price number is. That'll tell you what are the sellers on average in this community giving away, and also check the concessions box because it will tell you if this was a higher to 99%, but yet they're giving away X percent in the concessions. Well, then there's your story. It teaches you how to draft the contract, like we were talking about last week, Mike, about how to pay attention. And Justin, or maybe it was the week before, but we were talking about how to package a buyer. And use your loan originator to help you position that buyer to understand whether they can or can't afford the home and how much you need to negotiate on their behalf. Mike?
All right.